Hi, this is Gerald Salenti. It's Thursday, March 22nd, 2018. And here are some of today's trends in the news. On the market front. Hey, remember yesterday, the first day of spring? Well, the market sprung down yesterday, and they sprung down again today. Everything's down, except a little bit up in Nikkei land over there in Asia. Europe down, US down, down. And gold down, oil down, Bitcoin down. It's a down, down day. So what's going on? Well, Dow closes down 724 points on trade fears. Posts worst day since February 8th, according to CNBC. February 8th. Hey, there were no trade fears back then, were there? No. Again, read your trend alert that went out yesterday. It has today's news in it. It's history before it happens. That's right, trend alert. Bull market, correction, or crash. Again, don't follow the headlines, follow the trends. We outlined it. U.S. stocks fell sharply Thursday, pressured by worries of a potential trade war and a decline in tech shares. Now, wait a minute. Again, worst day since February 8th. There were no talks about trade wars back then. This is a deceiving headline because here is today's Wall Street Journal reporting on yesterday's market decline. And yesterday's market decline happened after the new Fed chair came out there and said they're going to raise interest rates 25 basis points. And we saw the market go up 250 points, but close down almost 50 points on fears of rising interest rates. It's been a scam. It's that cheap dough that drove markets up, zero and negative interest rate policy and quantitative easing following the panic of '08 that boosted the markets. Didn't boost our pocketbooks, just the rich folks who play the markets. Stocks fall after Fed raises rates. Some worry higher bond yields will make shares less attractive. Okay? So now they're blaming it on tariffs? No, that news was being reported. That's old news. Go to last night's futures. When the Dow futures began, the markets were going down. Again, on this news. The headline news in the business media is as moronic and shallow as the headline news in the major media that's put out by the prostitutes. So, that's the story in a nutshell. Market watchers expect the central banks to hike rates 3 times in 2018, while the Fed announced it was increasing its rate hike forecast for 2019. Stocks closed lower on Wednesday following that announcement. Okay? That was yesterday. Again, we were the first to call the Trump rally a week after he got elected, and you go back to your Trends Journal, your top trends for 2018, and our fall edition of the Trends Journal, we forecast a 10% correction in 2018. We had that back in February, and it looks like we're going there again, and maybe even into a bear market territory. And again, read your trend alert. The answers are in that. And again, gold went up yesterday because, well, the Fed was going to raise rates 4 times in 2018, and now they're only going to raise them possibly a total of 3 times. But they may raise them again in 2019 more aggressively, and even more aggressively in 2020, according to their forecasts. But you know what the Fed forecasts are. You know how accurate they've been. They've been nothing more than total.
That was bullshit.
That's it. The facts are there. Hey, remember Bernanke said, no recession in sight. Yep. And oil. Well, oil went down because of grabbing profits. Again, we believe we're at the peak of oil prices. However, that's going to change as things heat up in the Middle East. So, interest rates. No one's talking about in the media what the cost of interest rates are going to do as they go up on housing, on autos, and on all that debt that you got out there. That's right, Americans, over $13 trillion in debt. So, as interest rates go up, you got to pay more dough. Mortgage rates go up. Car loans go up. Economy goes down. And why do they not like higher interest rates? Because it slows the pace of global mergers and acquisitions. That's why the markets are going down, because in anticipation of rates going up, global M&A in record sprint to $1 trillion. U.S. consolidation leads way. Tax cuts provide fuel. Pace beats record year of 2007. 2007. Hey, that was the year before the Panic of '08, wasn't it? More mergers and acquisitions. The facts are right here. No, the Trump tax cuts are not going into capital improvements. We're already looking at stock buybacks at record high for the year. That's where the money's going into with the tax cuts and the repatriation of the dough overseas. And the same thing with merger and acquisition activity. Global deal making this year crossed the $1 trillion mark on Tuesday, the fastest it's reached that level as a wave of consolidation spreads across the United States. And activity in the UK, China, Germany, and Japan accelerates. Tax cuts passed in Washington last year have provided an accelerant as boardrooms reassess the capital they can plow into acquisitions, not into creating jobs, cutting jobs, because the more they acquire, the more they cut, and the less you earn, because you become a worker on the plantation in Slavelandia. Going back to the markets, why this is not about Trump tariffs or trade wars. Again, today's Wall Street Journal reporting on yesterday and news before that regarding the markets. ETFs rise stokes fear of trading difficulty. Remember, the markets are over-leveraged, ETFs, and overvalued. Price-earnings ratios are near record highs. Bets against some exchange-traded funds have hit records as investors question whether this industry could handle sudden redemptions in a downturn. The number of shares being shorted in two of the largest high-yield bond funds has risen to records this year, reaching 40%. You got it? You can see the fear is going into the markets. They're giving us false headlines. And moving on to some other trends in the news. Meredith to lay off 1,000 at Time Incorporated. 1,000 staffers. Time Magazine. Yep. Last week's news tomorrow. And they got 1,000 people even to cut? Anyway. Not the Trends Journal. As they're cutting, we're building. That's right. You got your notice today. The Trends Journal quarterly, poof, it's gone. No more quarterly Trends Journal. a trends journal every month. That's right. Every month, more trend alerts and more special features. And one of those special features, tune in tomorrow for Friday's Trends Special. That's right. The Friday Trends Special is just one of the many bold, exciting improvements we're rolling out for you this spring. We'll showcase my conversations with entrepreneurs who have built and grown successful businesses and feature a wide range of special guests and unique insights covering on-trend topics. So, there you got it. As everyone in the newspaper and magazine business is cutting back, we're building up, giving you more and more trends to help you prepare for what lies ahead. And to show you the difference between fact and fiction, General Mills sounds alarm for food sector. Packaged food companies already are struggling to respond to a shift in consumer preferences toward healthier foods. Guess what? You know what that is?
Bullshit detected. Take precautions.
The healthy food market is minuscule. When you look at the retail sector in food in the United States, it's around $400 to $500 billion. Organic, accounts for about $40 billion. Remember I read this to you yesterday? U.S. opposes new warnings to junk food. Yeah, they want to put more labels on junk food. In NAFTA talks guided by big companies. Obesity has at least doubled in 73 countries since 1980. Many public health officials worried about the rapid spread of highly processed foods have found hope in a new tactic, the use of vivid warnings on foods with high levels of sugar, salt, and fat. Hey, you don't need warnings. People know what they're eating, and they like to eat that stuff. The reason the big companies are losing out is they're getting more competition, and people are tired of their product. They've had their day. End of story. They got too big, and they got too fat to keep growing. And on to some other news. Trump defends his call to Putin. He called him to congratulate him. Quote, I called President Putin of Russia to congratulate him on his election victory. The fake news media is crazed because they wanted me to excoriate him. They are wrong. Getting along with Russia and others is a good thing. And Trump is right. But then you have morons shooting their mouth off like little Marco Rubio, a little boy of nothing. You're senator. You're a jerk. Another jerk off. Name your state and you got one near you. Oh, we got little Chucky Schumer over here. Yeah, one moron after another. But it even gets better than that. Ex-CIA chief suggests Putin may have compromising information on him. This is from John the Lousy Liar Brennan. Yeah, the former CIA chief saying that, well, you know, there must be something going on over there. Oh, you'd believe him. Saddam Hussein had weapons of mass destruction in Taj Stockade. You remember that, right? This is the best part. Along with Mr. Brennan, who's a paid contributor to NBC and MSNBC. Hey, wait a minute. A paid contributor on NBC and MSNBC? You mean you have a CIA guy there that's telling us what's going on? Boy, sounds like the Russians. Because what democracy would have the CIA director as their mouthpiece? Yeah, another prostitute. That's all it is. And talking about morons shooting their mouth off about Russia, UK's Prime Minister Theresa May urges EU leaders to unite against Russia threat. Ooh, the Russians are coming. Yeah, they killed that spy. We don't provide you with any evidence. We say it. That's what it is. No other way. And people believe it. Just like there's not one shred of evidence, not one piece of hard evidence, other than the word, of course, John Brennan, that Russia hacked into the DNC. And again, the reason Hillary Clinton lost had nothing to do with the Russians. She's a disgusting human being that a lot of people didn't like. This is Gerald Salenti, and that's some of today's trends in the news.